AI has been booming and is still in the forefront of everything crypto at the moment, along with real-world asset tokenization and many other key sectors and buzzwords. Well, in today's video, we're going to be taking a look at 𝗕𝗘𝗪𝗧. We're going to be taking a look at 𝗕𝗕𝗪𝗧 and the 𝗕 token with the kind of lens and the scope of thinking about the next bullish market of 2025. How high could 𝗕 really go? So this is going to be my 𝗕𝗕𝗪𝗧 𝗕 price prediction for 2025. As I get into it, if you do find it useful, informative, smash that like button. If you are new to the channel, subscribe, and let's go ahead and take a look at what's going on with 𝗕𝗕𝗪𝗧. Okay, so this is going to be an interesting video because there's not a huge amount of data available to us, so it's going to require a bit of thought. It's going to take a bit of vision, and we're going to see how we can kind of get on with the price analysis and predict out where the potential for 𝗕𝗕𝗪𝗧 is going. Okay, now in order to do this, there's a few things that we need. First of all, our chart. This is 𝗕𝗕𝗪𝗧 paired up with USDT. We are on the 1-day 𝗕𝗘𝗪𝗧 exchange. The reason that we're using 𝗕𝗘𝗪𝗧 here is that it has the most amount of data. 𝗕𝗘𝗪𝗧 is one of the platforms that usually lists tokens before the larger exchanges like Binance or Coinbase, for example, right? So you can get in much earlier on platforms like 𝗕𝗘𝗪𝗧, KuCoin, and so forth. So for this, we are going to use 𝗕𝗘𝗪𝗧. Obviously, when we do buy on 𝗕𝗘𝗪𝗧, we use limit orders. We don't do market orders on 𝗕𝗘𝗪𝗧 because there are obviously issues with bots kind of scraping, and kind of you end up buying higher prices on market than you would if you were to just limit order. It can take a while to fill your bags, but it's a great platform if you want to get into early projects using the actual platforms that list them much earlier, outside of DEXs, of course. Okay, so we're going to use a couple of tools to help us predict out where we think the price action is going, right? So we're going to use Fibonacci retracement and extension tool. That's this one right here. It's built in directly into TradingView, and it's a great tool for being able to predict out where things are going. These are my settings for the Fibonacci retracement tool. You can pause it, kind of copy these if you want. It's entirely up to you. The main one at the bottom here is fib levels are based on log scale. For those who don't know, your charts on default look like this. This is not logarithmic. I have my charts on logarithmic, which means my Fibonacci retracement tool has to be on logarithmic. If it's not, you can see the chart there on the left. It changes depending on whether I have this ticked. So we make sure that if my chart's on logarithmic, my Fibonacci retracement is also on logarithmic. Okay, cool. So we're going to use that. That's going to be tool number one. The second tool that we're going to use is what is called Elliott Wave. Elliott Wave can be a little bit complicated, but for the most part, it works out very, very well. What Elliott Wave does is it tracks the behavior of buyers and sellers. Okay, there are many different patterns. We have the ABC here. This is known as a zigzag pattern. We have a WXY pattern. This is known as a double zigzag pattern. So you'll have your ABCs in there like so. Okay, then you have your impulsive trend settings, which are your 5-wave patterns like this. There's many different types, many different forms, but it gives you an idea as to kind of what we're going to be using today. Now, Elliott Wave is a complicated subject, which is why I put together a whole course dedicated to learning Elliott Wave. It is at 𝗕𝗘𝗪𝗧.com, linked in the description down below. If you're interested in understanding more about the psychology of buyers and sellers, liquidity, markets, then there's a couple of things you should probably check out. The Elliott Wave theory course that I put together, which basically goes through the idea of tracking the psychology of the buyers and sellers, and a smart money concepts course that I put together over at 𝗕𝗘𝗪𝗧, which basically tracks the idea of institutional money coming in and out of markets, and liquidity hunting, and the importance of liquidity and fair value gaps, all that kind of stuff. In today's video, though, we're focusing in on Elliott Wave because we're trying to predict the future. A lot of indicators don't allow you to see forward. They only show you what's already happened, such as the EMAs and SMAs that you see on the chart. So we're going to use Elliott Wave because it gives you predictive capabilities. Based on the history, you can predict what the next move is going to be. Okay, so we're going to use that to predict out 2025's future for 𝗕𝗕𝗪𝗧 and 𝗕 token. Okay, so a little bit complicated, but you can check out the course if you want to know more about the detail of it. So the first things that we need to do is we need to understand where 𝗕 has been, right? So for this, we obviously have a date down here coming in at the 5th of September 2023, $21.40. Okay, now that might be when 𝗬 launched. It might not be, right? But that's the earliest data point that I have for 𝗕𝗘𝗪𝗔𝗡 here. Okay, so that's going to be our starting position. We then have a peak. The peak happens to be up here in a very interesting structure. We're going to take a look at that in a little bit more detail in a moment because I think that's a false flag there. It comes in at $795. Okay, and then of course we have the most recent moves to the downside. So the most recent move to the upside was the 11th of April 2024, and the question becomes, are we going to be going up higher? Are we going to be going to a new all-time high? And well, the future does look reasonably bright. Okay, so knowing that we have a swing low and a swing high, we can then look at our price action in here and take a look at what we think is going on. Now, for the most part, I look at this area as a very interesting kind of reach to the peak here. It does to me actually look like it does make sense with an overextension in what we would call a fifth wave move. But for us to do that, we need to first of all ascertain where our price action has been and whether or not it is still in a really good area. So what we're going to do is, or what we just did, I should say, is I measured the distance between the swing low and the swing high. Okay, this is basically going from 0 to 100%. That's what I've measured using the fib tool right here. Okay, so we measure from 0 to 100. Okay, in that little move. I then move it and I put it at the low of our wick here on the 19th of October 2023, because what I want to do is I want to see the strength of this next move to the upside in relation to the strength of this move. The fib tool allows me to do that, and it allows me to see areas of psychology where resistance tends to be found. Okay, so what we've done here is I've measured that distance and I'm comparing it to this distance. And we can see on the fib scale that we reached higher than 1.618. That's an impulsive trigger point within Elliott wave. Okay, so we don't just measure the distance down at the low side like this. We don't just go ahead and snap a couple of snap a fib level on the lows here and say that this 1.618 is our target and we hit it here. That's not what we do. That's not the correct use, because the actual terminology of Elliott wave tells us that our wave 3 has to be 1.618 times more than this level, which means we want 161.8% measured on this move as a relationship of this move. Okay, so it's a little bit complicated, like I say, but for the most part, we easily hit 1.618, and that's a key trigger point for an impulsive break. We can also see internally here, and why I said there was an overextension in this move, is that there's a 5-wave move internally. We have a wave 1, a wave 2, a wave 3, 4, and 5 inside. We also can see over here that we would have the wave 1 to the upside, the 2, the 3, the 4, and then we have that overextension. And that overextension consists here of a wave 1, 2, 3. I'm going to have to look for the 4 and the 5. So it's more like this. And you get that overextension. That is an overextension because typically it should not have gone that high. I use the word typical because Elliott wave tracks 5-wave movements like this, and it's a very impulsive breakout. We should have actually stayed within the parameters of this level, but the breakout was significant. It moved up higher, right? So we should have capped out about 603, but we went to 795. We could see that from the internal workings. Here we can also see natural resistances, but the moves were not complete. They were not finished. So we continue to track it higher. Okay, and that's the beauty of Elliott wave, right? It tells you based on the Fibonacci retracement levels where the future is going. Now, a 5-wave impulsive move, so your 1, 2, 3, 4, and 5, contains 5 waves in wave 1, 5 waves in wave 2, and 5 waves in the 5th wave movement, with 3-wave retracement levels. They call it a 5, 3, 5, 3, 5 for short, if they want to call it short, or they just say it's impulsive. So for the most part, that's typically what you find. Now, go ahead and delete all that off. Like I say, all this stuff is covered in the course, but it's important because, as I said, your impulsive trigger points are basically 5-wave moves like this, right? But we also have corrective 3-wave moves that are known as a zigzag pattern. Now, the interesting thing about a zigzag pattern is that they contain 5-wave moves. You have 1, 2, 3, 4, 5 in your A wave, and you have a 5-wave move in your C wave. Now, there's lots of different types of 5-wave moves. You have an impulsive one like this one here, right? We have diagonal based ones like this one here. We have more contracting ones as well. So you'd have like a really small wave 1, big wave 2, bigger wave 3, an overlapping nature of wave 4, and then a really big wave 5. This would be an expanding because it kind of expands out like this, and you can argue even wave 4 comes down. So there's a few different ways that you can kind of look at it. Like I say, the course goes into all the detail. The reason that I mention it is, of course, is we have a 5-wave move here. This 5-wave move to the upside from our origin level on the chart to the peak that we saw in early this year, April time, is a 5, 3, 5, 3, 5, right? So it's an impulsive move, but they don't happen on their own. You can't just have a 5-wave pattern like this on its own, which means we're looking for another 5-wave pattern, which means pretty bullish times for 𝗕𝗘𝗪𝗔𝗥𝗘, for tau, right? So the question becomes, how high is that going to go? Well, like I say, when we have a ABC structure, which is what I think is going to happen here, your C wave pattern, so the C wave, should mirror that of your A wave. Okay, so typically you measure the distance between that A wave and then you basically predict out that prediction for the C wave. Okay, so this is on a macro scale, right? So we're not talking this is going to happen instantaneously overnight, but it gives you an idea. There are things that can also go wrong. We can, of course, see what they call truncated moves, which are basically falling short of their targets. But we're not going to worry about that just yet. We're going to, first of all, measure our distances here and assume that our A wave is likely to repeat and get snapped, repeat itself and move in a similar fashion as we had seen before. Okay, so this gives us our insanely bullish target for 𝗕𝗘𝗪𝗔𝗥𝗘. Okay, so our wick low coming down here, this was on the 5th of August. That low was 163.60. So I want to make sure that my Fibonacci level is on that exact level as well. So I'm just going to go ahead and adjust it to 163.6. Okay, so our Fib levels are 163.6, and our targets, this is insane, okay, this is the bullish levels. I don't think we're going to head there, but it's one of those things I would be not doing my job if I didn't put it in here, so I'm going to. An ABC structure would look like this. A wave up, B wave down, C wave up. The C wave target is $6,075, upwards towards a potential overextension of $14,256. Okay. Insanely bullish, right? That percentage, though, from our wick low to that $6,000 target is about 3,500%, and upwards towards 8,500% for that higher range target. Okay, so it's something that we can think about, we can be reasonably confident on, but we don't want to rely on that. Instead, we want to think about other areas in the chart that are going to be natural resistances based on Fibonacci levels. Okay, so we have the 0.618 and the 0.786. That's these levels right here. So 1,527 to 2,803. These are going to be an area where the price action does want to kind of feel like it wants to reject. Okay, so we want to be mindful of that. Okay, so bear that in mind. Now, with all that being said, I can delete that off. We have those kind of targets kind of scoped out there. The structure that we've seen so far is actually a good one. It's not bad. Here we can see a 5-wave move. So we have 1, 2, 3, 4, 5 coming in here. Okay, we can see a cooling off at the minute. We can also see here what looks to me like a very interesting flat correction. And I use the word flat correction because it doesn't necessarily tell us that we're finished with those moves. So that low move that we had at the moment on the 5th of August, it may get lost. Okay, so we want to bear in mind that all those price targets on that slightly higher range, they're based on that low holding at 163.60. If they don't hold down there and the price comes down deeper, then we want to be concerned. The idea here is that maybe we are not in that kind of bullish vibes that we need to see just yet. But there's a few scenarios that we need to check first. We have a move here and here and then here and here, right? So this can be a contracting diagonal, but to me doesn't fit. So I want to check the structure from the 5th wave here. Okay, and the reason I want to do that is I want to check where that sits. It doesn't quite fit that parameter necessarily. It's an interesting one. I'd have to take this down to like an hourly chart just to be able to kind of get that anchored in with the reversal that we saw. So here we can see a 5-wave move coming down, pushing up, and then that 5th wave being longer than, the 5th wave is longer. So it doesn't really fit the idea of a diagonal based pattern, which is unfortunate. So it is free wave correction of patterns. So bring this back to our daily chart and we'll bring that back into view. Okay, so the reason that I had to do that and the reason that it's important is we look for reversal patterns, but here we are not seeing one just yet. Now it can change into a big diagonal, which is another thing that we need to kind of keep in mind, right? This is possible that maybe this is not the 5-wave move that I think it is on the daily chart, and maybe this is some kind of corrective pattern that's masquerading as a 5-wave impulsive move. But for the most part, this is possible that this turns into a diagonal. If it does, we would be looking for probably a really big wave 5 scenario. But I think, outside of those current structures, whether we've bottomed out at 163.60 here or not, I do see a move out towards 1500 to 2800 for BitTensor and Tau. So 844 to about 1600%, I think is a very reasonable target. And of course, we'll keep those ideas of around $6,000 also in the back of our heads as a potential big bullish breakout to the move to the upside. Ultimately, it's possible that we truncate and we fall short and we don't hit those targets. But for me, I think, there's a reasonable expectation to think about $1,500 up towards that kind of $2,800 level for BitTensor and the Tau token. Of course, this is just my thoughts and opinions on the data in the charts as I see it. You can let me know in the comments down below what you think about it. Where are your price targets for the Tau token and BitTensor as a whole? Let me know, or join us in our free Discord server and we can continue the conversation down there. If you found this video helpful, make sure to smash that like button. If you're new to the channel, subscribe. And if you haven't done so already, don't forget to check this video out because it's one that I don't think you're going to want to miss.